In today's interconnected world, the ability to operate seamlessly across borders is no longer a luxury, it's a necessity. Entrepreneurs, investors, and individuals alike are increasingly seeking ways to optimize their financial strategies and expand their horizons beyond the confines of their home countries. This is where offshore companies come into play, offering a powerful toolkit for achieving greater financial freedom and flexibility. Offshore companies, once shrouded in an aura of mystery, are becoming increasingly mainstream, providing a legitimate and effective means to enhance asset protection, reduce tax liabilities, and streamline international business operations. This comprehensive guide will demystify the world of offshore companies, providing you with the knowledge and insights you need to make informed decisions about whether incorporating offshore is the right move for you. We will delve into the intricacies of offshore company formation, exploring the benefits, challenges, and ethical considerations involved. From understanding the nuances of tax efficiency to navigating the legal and regulatory landscape, this guide will equip you with the tools to confidently navigate the world of offshore finance. So, whether you're an entrepreneur seeking to expand your business globally, an investor looking to safeguard your assets, or simply an individual seeking to optimize your financial well-being, join us as we unlock the potential of offshore companies and empower you to take control of your financial future. An offshore company is simply a company or corporation that is registered in a foreign country, typically a jurisdiction with favorable tax laws or regulations. It is important to note that the term offshore does not necessarily imply a remote island nation. Rather, it refers to any jurisdiction outside of one's home country. Think of it this way: if you live in the United States and form a company in Delaware, even though it's a different state, it's not considered offshore because it's still within the US legal framework. However, if you were to establish a company in the Cayman Islands, that would be considered an offshore company because it is incorporated outside of the United States. Offshore companies are subject to the laws and regulations of the country in which they are incorporated, and they can engage in a wide range of business activities just like any other company. The key difference lies in the legal and tax advantages that certain offshore jurisdictions offer, making them attractive options for businesses and individuals seeking to optimize their financial strategies. In essence, an offshore company is simply a legal tool that, when used strategically and ethically, can provide a range of benefits from asset protection and tax optimization to increased privacy and global expansion opportunities. One of the most compelling reasons individuals and businesses choose to incorporate offshore is the potential for significant tax savings. Offshore jurisdictions often have lower tax rates or even no corporate income tax, capital gains tax, or inheritance tax. For example, the Cayman Islands, a popular offshore jurisdiction, has no corporate income tax, making it an attractive location for businesses looking to reduce their tax burden. By establishing an offshore company in a tax-efficient jurisdiction, businesses can potentially retain a larger portion of their profits, reinvesting those funds back into the business or distributing them to shareholders. It is crucial to understand that tax optimization through offshore structures should always be done legally and ethically. Engaging in tax evasion, which involves illegally hiding income or assets from tax authorities, is a serious offense with severe consequences. The goal is to leverage the legal tax advantages offered by certain jurisdictions to minimize tax liabilities while remaining compliant with all applicable laws and regulations. Remember, tax efficiency is about working smarter, not harder. By strategically structuring your business operations and taking advantage of the tax benefits offered by certain offshore jurisdictions, you can maximize your financial efficiency and unlock greater profitability. In an increasingly litigious world, protecting your hard-earned assets from potential lawsuits, creditors, and other threats is paramount. Offshore companies can provide an additional layer of asset protection, safeguarding your wealth and ensuring its preservation for future generations. When you hold assets through an offshore company, those assets are legally owned by the company, not by you personally. This separation of ownership can make it significantly more difficult for creditors or litigants in your home country to seize those assets. For example, imagine you are a successful entrepreneur who owns multiple properties, investment accounts, and other valuable assets. By transferring ownership of these assets to an offshore company in a jurisdiction with strong asset protection laws, you create a legal barrier between your personal wealth and potential threats. Of course, asset protection should never be used to evade legitimate debts or legal obligations. However, when structured correctly and ethically, offshore companies can provide a powerful shield, protecting your wealth from unforeseen circumstances and ensuring its long-term security. Section 5. Navigating the labyrinth, choosing the right jurisdiction. With a plethora of offshore jurisdictions to choose from, selecting the right one for your specific needs can seem like a daunting task. Each jurisdiction has its own unique advantages and disadvantages, and understanding these nuances is crucial for making an informed decision. Here are 3 popular offshore jurisdictions and their key benefits. The Cayman Islands are known for their robust financial industry, strong legal framework, and tax neutrality. They are a popular choice for hedge funds, investment companies, and large corporations. Belize offers a balance of asset protection, tax efficiency, and affordability. It is a popular option for small to medium-sized businesses and individuals seeking to establish offshore trusts or foundations. The Seychelles have a stable political environment, modern banking system, and flexible corporate laws. They have become an attractive jurisdiction for international businesses, e-commerce companies, and those seeking greater privacy. The best jurisdiction for you will depend on your specific needs and circumstances. Factors to consider include the type of business you are operating, your tax residency, the level of asset protection you require, and your budget. Section 6. Setting sail. A step-by-step guide to offshore company formation. Forming an offshore company is generally a straightforward process, but it's essential to follow the correct procedures and comply with all legal requirements. Here's a step-by-step guide to get you started. First, choose a jurisdiction. Determine which offshore jurisdiction aligns best with your business objectives and personal circumstances. Next, select a company name. Choose a unique name for your offshore company that complies with the naming regulations of the chosen jurisdiction. Then, engage a registered agent. Appoint a registered agent in the chosen jurisdiction. The registered agent will provide a local address for your company and handle official correspondence. After that, prepare and file incorporation documents. Prepare the necessary incorporation documents, including the memorandum and articles of association, and file them with the relevant authorities in the chosen jurisdiction. Next, obtain licenses and permits. Depending on the nature of your business, you may need to obtain additional licenses and permits to operate legally in the chosen jurisdiction. Finally, open a bank account. Open a corporate bank account in the name of your offshore company. This will allow you to conduct business transactions and manage your company's finances. Section 7. The importance of compliance. Staying on the right side of the law. While offshore companies offer numerous advantages, it's crucial to remember that they are subject to both the laws of the offshore jurisdiction and your home country. Failing to comply with these laws can result in severe penalties, including fines, legal action, and damage to your reputation. Here are some key compliance considerations. First, understand your tax obligations in both your home country and the offshore jurisdiction. Depending on your residency and the nature of your business activities, you may be required to file tax returns and pay taxes in both jurisdictions. Next, ensure compliance with anti-money laundering (AML) regulations. Offshore jurisdictions have strict AML regulations in place to prevent money laundering and terrorist financing. Ensure that your offshore company complies with all AML requirements, including conducting due diligence on clients and reporting suspicious transactions. Finally, adhere to Know Your Customer (KYC) requirements. KYC regulations require financial institutions to verify the identity of their clients and understand their business activities. Ensure that your offshore company complies with all KYC requirements when opening bank accounts and conducting business transactions. Section 8. Ethical considerations, dispelling the myths surrounding offshore companies. Offshore companies have often been portrayed negatively in the media, associated with illicit activities and tax evasion. However, it's important to distinguish between legitimate uses of offshore companies and illegal activities. The vast majority of offshore companies are used for legitimate purposes, such as international trade, facilitating cross-border transactions and expanding into new markets. Asset protection, safeguarding wealth from potential lawsuits, political instability, or economic uncertainty. Estate planning, ensuring the smooth transfer of assets to future generations. And intellectual property protection, protecting valuable trademarks, patents, and copyrights. Using an offshore company solely for tax evasion or other illegal activities is unethical and can have serious legal consequences. It's essential to approach offshore company formation with integrity and transparency, ensuring that all your actions are legal, ethical, and comply with all applicable laws and regulations. Section 9. Seeking expert guidance, charting your course to success. Navigating the complexities of offshore company formation and compliance can be challenging, especially for those unfamiliar with the intricacies of international law and taxation. Seeking professional guidance from experienced lawyers, accountants, and financial advisors is crucial for choosing the right jurisdiction. Experts can help you determine the most suitable offshore jurisdiction based on your specific needs and circumstances. Ensuring legal compliance, lawyers specializing in offshore law can guide you through the incorporation process, ensuring that your company is formed correctly and complies with all legal requirements. Optimizing tax efficiency. Tax advisors can help you develop a tax-efficient structure for your offshore company, minimizing your tax liabilities while remaining compliant with all applicable tax laws. Protecting your assets. Asset protection specialists can advise you on the best strategies for safeguarding your wealth through offshore structures, trusts, and foundations. Section 10. Case studies, real-world examples of offshore success. To illustrate the practical applications of offshore companies, let's look at a few real-world examples. First, an e-commerce entrepreneur, an online retailer based in the United States, decides to form an offshore company in Hong Kong to source products from China more efficiently. By establishing a presence in Asia, the entrepreneur benefits from lower manufacturing costs, faster shipping times, and access to a wider customer base. Next, a software developer creates a successful mobile app and wants to protect his intellectual property rights. He forms an offshore company in the British Virgin Islands and transfers the ownership of his app's copyright to the offshore company. This provides him with an extra layer of legal protection and helps to minimize his tax liabilities. Finally, a high net worth individual, a successful investor, wants to diversify her investment portfolio and protect her assets from potential risks. She sets up an offshore trust in the Cook Islands and transfers a portion of her wealth to the trust. The trust assets are held in a separate legal entity, providing her with enhanced asset protection and estate planning benefits. Section 11. Conclusion. Embracing the global landscape. In today's interconnected world, offshore companies have become an indispensable tool for businesses and individuals seeking to optimize their financial strategies, protect their assets, and expand their horizons. By understanding the benefits, challenges, and ethical considerations involved, you can make informed decisions about whether incorporating offshore is the right move for you. Remember, the key to success lies in thorough research. Take the time to understand the different offshore jurisdictions, their advantages and disadvantages, and the legal and tax implications involved. Professional guidance. Seek expert advice from experienced lawyers, accountants, and financial advisors to ensure that your offshore company is structured correctly and operates in compliance with all applicable laws and regulations. Ethical conduct. Approach offshore company formation with integrity and transparency, ensuring that all your actions are legal, ethical, and comply with all applicable laws and regulations. By embracing a global mindset and leveraging the power of offshore companies, you can unlock new opportunities, safeguard your financial future, and achieve greater financial freedom and flexibility.